Today I'm going to show you how I turned a $1 butterfly into a 4x return, and how SPX closed almost exactly where I predicted. This is my SPX day trading recap for Monday, April 20th. The strategy: a high reward to risk butterfly setup based on gamma and pin levels. At the open, we were clearly in a negative gamma environment. If you watched my last video, you already know what that means. Dealers start chasing price, buying high and selling low, which amplifies volatility. But here's something most traders miss. Before entering any trade, you need to check the VIX and overall implied volatility. Today, VIX pushed close to 20% shortly after the open, then slowly dropped back to around 19%. Implied volatility was also higher compared to last week. So combining elevated negative gamma plus elevated volatility. So I came in with a bearish bias but stayed flexible. Now here's the nuance. Even though we were in negative gamma all day, the gamma was not strong enough to trigger a major sell-off. That's critical, because in weak negative gamma environments, the market tends to gravitate toward key strike levels instead of trending hard. So I checked the GEX profile early in the session. The key levels were give 7,110 and give 7,115. These were the gamma peaks. So I opened to butterfly positions centered around those strikes, max payoff, roughly $10 minus the cost, with 10-point wings, costing about $1.50 each, so we're looking at a 1-to-5 risk-reward setup. Since those are options trading, the final number will be multiplied by 100. Into the afternoon, price hovered around 7,100. Now here's a pro tip. SPX rarely closes exactly on big round numbers like 7,100 or 7,050. Instead, it usually shifts about 10 to 15 points away, so I started narrowing down the range. At the same time, price kept testing 7,110 and getting rejected. That told me, gives strong resistance, gives high probability of a close between 7,105 and 7,110. At this point, I check GEX every 30 minutes. No major changes. My butterflies were already positioned right inside the expected range. Low cost, low stress. No adjustment needed. Then near the close, I saw one more opportunity. I added another butterfly. Gives centered at 7,110, gives with a 5-point width, gives cost about $1, gives max payoff $5. This is a classic closing pin acceleration play. Final close, 7,109.14, right inside the range we identified early in the day. All three butterfly positions finished greatly profitable. So what's the real takeaway here? This wasn't just a lucky trade. This was gives understanding gamma, gives reading GEX levels, gives respecting pin behavior, gives and managing risk with structure. If you want to learn how to identify high probability pin setups like this, or how to scale butterfly strategies in zero DTE trading, drop a comment below or follow for more. I'll break down more real trades like this.